Hello, ladies and gentlemen. Welcome to Triple N Media. I am NIK NIKAM. In this presentation, we are going to look at the top 10 Nasdaq stocks that are racing to the finish line before the earnings begin towards the end of April 2021. Let's look at the top 10 runners in the Nasdaq along with the QQQ, which is the proxy for Nasdaq composite index. So we have Apple comprising of 13.39%, Microsoft 10%, Amazon 10%, Facebook 4%, and Tesla, Google, two Google stocks, A and regular one, Nvidia, Adobe, PayPal. All these 10 stocks contribute 55% to the Nasdaq QQQ. So let us take a look and see where we stand as the earnings season begins in just less than 2 weeks. Let us minimize this and let's start off with the QQQ. And here is the QQQ. We have the Bollinger Bands here. We have the 20-period moving average, and also we have the 20-period moving average, we have the 10-period moving average, and we have the 50-period moving average. And here is the stochastic. We have the RSI and the volume oscillator. Let us start off with the QQQ. As you can see, QQQ has made the market high in the last couple of days. And the RSI, SS, the slow stochastic, RSI, all of them are at the overbought level. And along with that, there has been a progressive decrease in the volume of QQQ, despite the fact the stock has made an all-time high. So let's pay attention to all these numbers. Along with that, as you can see, QQQ had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days of consecutive higher closes, which is practically not seen in the last 2-3 years. So this had a huge run up, and all the indices are at the overbought level. So this may be in for a surprise correction like we see here in February and end of February. So let's keep that in mind. Now let's start off with the first runner here in the race, Apple. And this is a 6-month period, by the way, so that we can look at the earnings. Let me add the indicator earnings here, so we'll see where the last earnings. The last earnings for Apple was towards the end of January, and right after the earnings, it went even before the market crashed. Even before the market made a correction, Apple already had dropped. The market corrected on February 16th. This is the day it started correcting Nasdaq. And as you can see, it was at the top here at around $145. Right now, Apple is $131. But nonetheless, Apple has gone from $110 up to $31. It had a little downtick here today, but look at the indices. All the indices are showing as overbought, and the volume has slightly picked up in contrary to what we saw with the triple Q. So is there more room for Apple to go up? Well, there are, the $145 is the target. We had to see Apple earnings is going to be on April 27, 2021. So that is as far as Apple is concerned. But since the Nasdaq had such a huge run up and it's at all-time high, if the Nasdaq turns south, it will be taking Apple with it. Isn't that interesting? Nasdaq going down and pulling the Apple with it. We don't know. Maybe the Apple may pull the Nasdaq down. What do you think? All right, let's look at the next one here, which is Microsoft, Msft. Okay, Microsoft. Microsoft is becoming a darling of the QQQ because it made a earnings report on January 26th, and it peaked along with the rest of the market in February, and then it took a little correction here, but the correction was very modest compared to the Nasdaq Composite Triple Q. And in the meantime, it had a huge run up, and it is at an all-time high as it sits today, along with all the stochastics, RSI, all at the top of the overbought level. The volume has been progressively going down despite the stock prices are going up. And there are like 1, 2, 3, 4, 5, 6 candles at the outer edge of the Bollinger Band. So keep all these things in mind. Is there more room for the stock price to go up? That is anybody's guess. And it's going to be determined more so by the direction of the Nasdaq. And as you know, Nasdaq QQQ, Nasdaq, as you know, Nasdaq QQQ, S&P 500, and Diamond, they are all at all-time high, and that's what's driving this market. But all of them have decreasing volumes and increasing indicators of overbought level. So that is Microsoft. Let's look at Amazon. The story with Amazon is quite different compared to Apple and Microsoft. As you saw, Microsoft made an all-time high, whereas Apple was recovering from the previous earnings. And look at Amazon. Where is Amazon going? I have no clue, because Amazon topped somewhere here in October, and from there it has been trading sideways for the last 6-7 months. But nonetheless, it has made a remarkable comeback with 1, 2, 3, 4, 5, 6, 7, 8 green candles, with the exception of one, and going from all the way 3,000 to 33.79. That's almost a 10% jump in the Amazon price. And again, all these indices are just skyrocketing to the roof. And surprisingly, the Amazon volume is picking up. And maybe Amazon has still room to go. As you can see, the top here was like 3,492, and that's only 6 months. If you go to a year, it may be quite different. Let's see here, 1 year. Okay, here was the top. At 1 year, the top was like 34.88. So Amazon is nowhere close to its. It's almost like $100 from its top, reached somewhere here in August. All right, let's go back to 6 months interval. That's what we want to look at. And that's as far as Amazon is concerned. But again, you can see 1, 2, 3, 4, 5, 6 candles at the outer border of the Bollinger Band. All the indices showing overbought, except for the volume, which has picked up with the rising price with Amazon. So that's the story of Amazon. Let's move on to the next one, Facebook. What does the Facebook say? Facebook had a huge run up. Market bottomed on March 5th. After that, all the Nasdaq indices, including QQQ, started to move. But it looks like Facebook has made the most significant move among all the other ones we have seen so far. It went from 255 to 311. It made an all-time high on April 7th at $314.25. The indices tell a totally different story. And in the last several days, the volume for the Facebook is also dropping. So there are several indicators which are showing they are at the top edge of the Bollinger Band. The indices are extremely overbought. At the same time, declining volumes. Story seems to be repeating with all these Nasdaq stocks. Tesla is a different story. Tesla looks similar to ARK K ETF. It peaked somewhere around here at $900.40, and that was just 2 days before the earnings on January 27th. After that, it went from 900 all the way down to like, what is this? The lowest was like $539. From $539, it is struggling to break through all these resistances. Tesla just closed at 701.90. Still, it is $200 from where it topped. Compare this to the other stocks we saw, like Facebook, which had a huge run-up after the March 5th. Where's the March 5th? Okay, this is where the Nasdaq sort of bottomed with the current correction. And as you can see from here, the Facebook has gone up straight like this, whereas Tesla is struggling, and it is going through almost like a sideways, except for a little bump in the market today. So again, the volume is going down here with Tesla. Let's look at the next one, Google. Google is another impressive darling story. As you can see, Google made an all-time high yesterday at 2,289.04, whereas as you see, contrast this with Tesla. Tesla was down here in the bottom, whereas Google and Facebook, all of these are at the all-time high, including the triple Q. Even though Google didn't drop very much during the market correction on March 5th, it dropped very little. But in the meantime, in the last 8 days, it has made a steep run-up, and the indices are again telling the same story. And what has been concerning to most technical analysts is the declining volume trend with increasing prices, with indices that are at the overbought level. So I think it would be prudent to watch our stocks because of all this overbought condition with decreasing volumes. And every time you see an increase in volume, there's going to be some activity. And if the Nasdaq is turning south or going down, then it's going to drag all these stocks, or I should say all the stocks are going to drag the Nasdaq triple Q down along with them. Nvidia. Nvidia is a very interesting stock. As you know, Nvidia is the graphic card king in the world, and in fact, many people are projecting that the Intel may become secondary as we move into more and more cloud computing, whereas the graphic presentation becomes the main driving engine inside the computer, and the central processing unit is just for exchanging data from the remote server to the desktop. It's like a workstation with a supercharged video card, and that's where Nvidia is making a huge impact. As you can see, on February 12th, it made a high of $614 and change, and it had a huge run up. That is today on April 12th, it had a huge run up from 570 to 608. Almost $38 run up. Somebody knows something is going on behind the scenes here. And the earnings for Nvidia was here on November 18th. It should be 18th somewhere here. But Nvidia had taken a huge beating during the market correction. Here's the earnings. During the market correction where it dropped all the way to 460, but it has made a remarkable comeback, just like Facebook, and it had a huge run up of almost $38. That's like 8% or 6-7%. But again, all these indices suggest an extremely overbought situation. Let's look at a couple of more stocks here. ADBE, Adobe, just like Amazon, it's going on sideways and made a significant drop here during the market correction in February. It dropped from $500 to $420, $80. So that is like 16% drop, more than Nasdaq, which dropped like 14%. But it has made a remarkable comeback, unlike Tesla or other stocks. And as you can see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Out of 14 days, you see only like 2 red candles here, and 1, 2, 3, 4, 5, 6, 7, 8 candles at the top Bollinger Band, but the indices are up. Look at the volume, it has gone down tremendously. So these are some of the things we need to be watching, because as the volume picks up, there could be some change in the prices. And it is going to be dictated by other Nasdaq stocks. And another important thing to realize is this may all be the pre-earnings tech race, which we have already seen in the last 2 weeks since the market correction ended on March 5th. So there has been a significant run-up of all these stocks, and we don't know if there's any more room for these stocks to go up, as the earnings are going to be coming through the gates in about 10 to 12 days. And let's look at one more. PayPal. That's the last one we're going to look at. This is a totally different story. I mean, this is almost like Tesla. You know, it peaked at $300 on February 16th. That's when Nasdaq peaked and most other stocks. And it took a big nosedive from 300 to 220. That's like $80. That's a huge drop. And from there, it has made half the recovery, but nowhere close to anything like Facebook or Triple Q. So let me go back to Triple Q and conclude this presentation. As you can see, Triple Q, which peaked on February 16th, dropped 14%, but it recovered most of that in the last 2 weeks, and it is at an all-time high, and it has gone through most resistance levels, and all the indices, the moving averages are looking up, and all the indices like Stochastic, RSI are all at the overbought level, while there has been a progressive decrease in volume since March 23rd. That's almost like 3 weeks. There has been a significant and progressive decrease in the volume. And when you see an increase in volume, and that's when we need to be concerned about which direction the Nasdaq is going to take. So we will find out in the coming weeks as what's going to happen to Nasdaq and to the tech stocks, which will be announcing their earnings in 2 weeks. Thank you so much for watching, and please do subscribe to our channel, and we'll see you next time.